what makes America the greatest country in the world.
Soldiers, sailors, Marines, airmen.
Stood up for what was right. First step in solving any problem is recognizing there is one.
It's time we started talking. Pain isn't something we talk about.
All we can ever do for our heroes is remember them, and they gave up two lives. The one they were living and the one they would have lived. They gave up everything for our country, for us. Let's pray for freedom and justice.
Only be a war if soldiers are willing to fight.
Less than 1% of Americans serving in uniform. Some veterans not getting the timely care that they need. The good news is that in recent years we've made historic investments to boost the VA budget.
What is it? Why should we care?
We should care about press freedom
because we were informed.
In democratic societies, free, diverse, and pluralist media enable public debates and are essential checks
You don't
on
look
power.
sad. Let's discuss.
Hey guys, how's it going?
Hey guys.
New episode, episode 3, home buy, and this is a special one. I guess it all affects us at some point in life. And Joe recently got his house. Myself, I did a lot of research, but I didn't get mine, or anyway closer. But at least I got some information we can share.
Yeah, and let you guys know what we ran into.
Yep. And as all we know, like purchasing first home or first apartment or condo, whatever you're looking for, is an exciting event in everybody's life. But for some people, it can be confusing, intimidating, or I don't know, just really difficult. So, and what do? You just go to Google and find some articles like factors to consider when buying a home, purchasing your first home, 10 things many borrowers don't know about VA loans, and so on and so forth. But as for me, it didn't help me much until I actually decided to dig deeper and to understand what does it mean. So, we broke the whole process into different steps. Some may be in front of others, but excuse us for that. Just we apologize. It's just the way we figured it out, the way we lay it down for you.
Yeah, and hopefully you guys get something out of it.
Yeah, and of course that's for mostly for the veterans. So I guess the first step would be get your certificate of eligibility from VA.
Yeah, and so the VA insures your loan in case of default. That's why VA loans do not need a down payment versus conventional financing. But remember, most, if not all, lenders have additional overlays, like minimum credit scores, things like that. So that still go above and beyond the minimum VA guidelines for borrower eligibility, even with the VA insuring your loan.
So what are the pros?
So some of the pros of the VA loan, it's a lower rate than average. There's no monthly mortgage insurance. Especially not an issue when you're comparing to the conventional loans with like 20% down. The loan is assumable. It's 100% financing, frees up your reserves for an investment property, or maybe even open your own breakfast cafe if you always wanted it. Breakfast is always good.
Right.
It's easier to refinance for sure. There's no appraisal or income docs, things like that. It's more lenient with underwriting guidelines, which is not obviously like not an issue with the 800 plus FICO score and tons of reserves, but VA residual income requirements are a lot more forgiving as well.
So those are pros, and but of course it got minuses. So what are the cons?
So some of the cons that you guys want to consider when you're thinking about a VA loan is the VA funding fee, which is currently at 2.15% right now, unless you're disabled and on active duty and you have that disability percentage. So check out those videos and try to figure out how to do your disability if you haven't jumped on it, but you guys really should. Must be owner occupied, so it shouldn't be used as an investment property, especially your primary residence. So make sure this is your house that you're going to live in. Most reconstructive, if planning on to buy a fixer-upper, usually doesn't work. They really need that home to be livable and being able to be livable the moment you move in there. County loan amount limits currently in San Diego, it's $477,000. You guys around Los Angeles County know that housing is ridiculous right now. So sometimes those loan limits may not help you in those higher places. Condos must be VA approved, and approval depends on things like owner occupancy rate, HOA, soundness, and a slew of other things. Like I remember when I was looking at the townhomes, they didn't want them to be attached walls. They all had to be separated. So it was like those little random things that you really didn't know. And so for those of you that are completely confused, here's a little rundown of what's going on. VA has a requirement that if the borrower's debt-to-income ratio exceeds 41%, meaning 41% or more of their monthly gross income goes towards paying debts like auto loans, mortgage, credit cards, child support, then the borrower must have at least 120% of the residual income requirement stated by the VA. The VA's residual income calculation table is found on this page here, so check out that link. So for an example, based on the chart I linked to, a loan amount of $220,000 for a family of 4 living in California would have a minimum residual income of $1,117. That means after their credit card, minimum payments, mortgage, taxes, car payments are paid out for the month, they need at least $1,117 remaining to go towards things like cell phone, car insurance, food, clothing, things like that. Now in this case, as the borrower's DTI is too high, the VA will still approve the file, but only if the borrower has at least 120% of that $11,700 minimum residual income requirement. So 120% and 1117 would equal somewhere around like 1304. In the case of active duty veterans though, the initial calculation needs to be reduced by 5%. So in this case, the 1117 is now somewhere around 1061, which would then need to be up to 120% since their DTI is too high. So their minimum residual income needed for VA approval would be $1,061, and times that 120% would be somewhere around $1,273.
Yeah, so even though if you have some of the stable income, try to have as less items on your file as possible. By that I mean it's better to have less car payments, or pay off your car, or pay off any credits that you have if
Definitely.
you can. And of course we'll provide a link on VA loans from official VA website.
Yeah.
So once you get that certificate of eligibility from VA, which is normally you can get it automatically from e-benefits, or you can just request it by sending a letter. So
Yeah.
you'll get it in 1 week or 2.
But e-benefits is definitely a better bet when it comes to this.
Yeah, so that's an easy step.
Yeah, and I personally don't like e-benefits that much. It's definitely getting better, but when it came to the housing, it helped me out a lot, so they're definitely good with that.
Yeah, so once you get that, you move to step 2, which is bank pre-qualification letter. And they will, well, if it's a military bank, USA, or what's that?
Navy Federal?
Navy Federal, so you'll have less issues with them knowing that you're a veteran, or you are active duty, or you served. So in that pre-qualification letter, they will have an
They'll basically figure out how much of a house you could afford. So when you go and talk to your real estate agent, they'll say you could only go up to 500,000, 400,000, and so your real estate agent knows he doesn't have to go look at these other houses that are outside of that pre-qualification. So it kind of just shows how much house you can get.
Yeah. And that's the first time you'll sign something.
Yeah.
So you pretty much will sign affiliated business arrangement disclosure statement, and that's it. Doesn't oblige you to do anything, but that's the first time you'll sign something, so don't be nervous about this one.
Yeah, you're definitely going to be signing a whole lot of documents.
Yeah, and they will tell you like how much you qualified for. Let's say it's like 200,000, 300,000, and they will also talk about fees. So, for example, one of the, we're not going to say the bank, but one of the banks would charge a fee of 650 as an application fee. So appraisal fee would be on average like 400, 600 or 600. They might charge you for lien fee, so that's the fee that they're gonna use to search if there is any
liens or
attached to property.
yeah, anything attached to the property in general.
Yeah. So they would ask you for insurance fee for 1 year upfront, most likely. And there are other fees. So some of the banks might charge you like origination fee. It's just a fee. Another one. So and
there's always going to be something.
Yeah, and you always want to know mortgage rates from this bank as well, even though that you are getting loan from VA, but VA is actually signing on the loan. They're not giving you money. They are like insurance.
Like a rich uncle.
Yep. So most likely you'll get in between 3 and 4% from the bank. I don't know if it's good or bad, but you can compare it to any conventional loans. And of course, the bank would send you a letter with all the breakdowns of what you have to pay. And you got to know that those fees might be covered by VA, or they might be allowed, or they may not be allowed. So you got to check those two lists. And you would ask me why they don't work together with the bank. But it's your responsibility, first of all.
Yeah. So one that I noticed was being in Southern California, I still got to get an earthquake insurance. That didn't come with the house. Which you would think it would be kind of like a given. Guess not.
Right. So like VA non-allowable fees when a lender is not charging a 1% origination fee.
Our termite pest inspection fees, attorney fees charged as a benefit to the lender, mortgage broker fee, realtor commission, prepayment penalties, and HUD FHA inspection fee from builders.
Yeah, look for those so you won't have to spend them yourself.
Yeah.
And also those VA non-allowable closing costs are not limited but include
the underwriting fee, the processing fee, the mortgage broker fee, administrative fee, tax service fee, wire fee, and the escrow fee.
Yeah, a lot. So VA allowable versus non-allowable, which means VA does not allow a veteran using a VA mortgage to purchase a home to pay for certain fees. They call these fees VA non-allowable fees. So any party involved in the transaction other than a veteran, which can be like lender, real estate agent, or seller, may pay for the VA non-allowable fees for the veteran. They may, but they don't have to.
Yeah.
So sellers can pay those costs, real estate agents can pay them, or the loan originator can absorb them, but we got to look out for those. So also in that part of the bank, like in the bank part, we should also consider a construction loan. So in case you want to build your own house and not just to buy a house, it still can go through VA.
Yeah.
And you can still get money for that.
So this is definitely valuable to us. We are trying to purchase land, build a home, and finance using a VA loan. USAA does not do construction loans, only mortgage loans. VA does not do construction loans, only mortgages. So am I turning to a local bank to request financing for the construction loan? This loan may or may not include the cost of the land depending on how we structure it with the builder and also with the seller of the land. The consideration for how to finance the land and the construction and the ultimate mortgage is how many times must we pay the closing cost and go through the paperwork to get the home we dreamed of for decades. It is a daunting process and requires upfront money from us. The VA loan is supposed to allow veterans the opportunity for home ownership with little upfront cost, but only applies to constructed buildings, not Imagine, Architect, housing under construction. The VA mortgage is based on the existing value of the house and the land. If it isn't complete with the proper permits, the value is not real.
Unfortunately.
Yeah.
So, and the difference in these two conversations depend on who is carrying the construction loan. The case of the person whose house is almost complete, they do not have a construction loan. Or they have a regular VA loan that will start when they buy the house from the builder. So the builder builds the house and you buy it from him, even though that he's constructing the house for you. So that might be a little bit tricky.
Yeah.
So we'll give you a couple more hints on what we got from an expert from the bank that he provided. So typical construction loan, the builder draws funds as needed during the various stages of construction, like farming, drywall, slab, and etc. And the borrower only pays interest on the drawn amount. So whatever he takes to use for construction, you pay interest on that amount. The bank requires inspections prior to each new draw to ensure the previous work has been completed. Just imagine how long it's going to take. And upon completion, a new permanent loan will be facilitated and separate closing will be required. So that's just a whole bunch of papers. And you actually going back and forth to the construction bank and the builder. So he needs to be a good friend of yours. Or you got to pay him a lot.
Oh, yeah.
Or new construction loan. There are no drawers, the builder pays for construction. So you're not paying anything, but you're gonna pay him once it's completed. So he might be willing to sell you this house and this land once it's completed. Somehow you got to sign an agreement that he's gonna sell it to you, because most likely, at least here in LA, that the time when he builds it is gonna be more expensive than what he promised to you.
Yeah.
And if a conventional loan is used, the initial appraisal is based on the plans and specifications provided by the builder, and final inspection will be performed to ensure completion. If a VA loan is used, the appraisal takes place once the home is 95% complete, and the final inspection will be performed to ensure completion, which is difficult. So most likely you'll be buying a house which is already built.
Yeah.
So step number 3, which is VA Regional Loan Center contact information. So those guys, you need to
contact them, especially with any questions you got, and see what's going on, see what they can do for you. When it comes to the inspection fees, the allowable fee for an inspection conducted by a fee appraiser to verify completion or installation of repaired items or customer preference items listed on the appraisal report remains unchanged at $100.
Yeah, but that's information from them. So your bank might up it up like 400, 500, or whatever it is. The ways they're allowed to do it, because they tell VA that they're gonna cover those costs.
Yeah.
But you'll pay them somehow otherwise.
Travel fees. Additional charges for time or mileage are generally not authorized for appraisals or inspections performed within the appraiser inspector's designated coverage area, which may consist of multiple cities or counties. If an appraiser or inspector is requested or assigned by VA to perform an appraisal or inspection outside of the fee person's normal business area, an additional fee may be charged only for that portion of travel beyond the normal business area. No mileage fees may be charged when the job site is 20 miles or less, or 40 miles round trip.
Which is actually not a big issue here in LA because there are a lot of appraisals.
Yeah, and LA County's very big.
Yeah, but it might be an issue for somebody willing to buy something in the village or away from big cities.
Yeah.
Late charges.
Late charges. Lenders and other appraisal requesters should note VA Form 26-1805, request for the determination of reasonable value states on receipt of certificate of reasonable value or advice from the Department of Veterans Affairs that the certificate of reasonable value will not be issued, we agree to forward to the appraiser the approved fee which we are holding for this purpose. So if a payment has not been made within 30 days of billing, a reasonable late charge is authorized, and reasonable is defined as no greater than $10 per month after 30 days has elapsed from the date of billing.
Yep. So also cancellations.
Yeah. Cancellations, lenders must notify the fee appraiser and the VA if a case is to be canceled. A reasonable fee for partial work already performed may be charged at the discretion of the fee appraiser.
And I hope you will not run into unusual or complex cases.
Yeah, I hope not.
Yeah.
If that's the case, you probably got
Yeah.
a bad house and don't want to go any further.
Yeah. But in my understanding, unusual or complex cases, it's a whole case of buying a house.
Yeah.
Itself.
Yeah.
Also, we'll include, like you can watch if you're watching YouTube, VHA and VA no allowable and allowable fees, so you can look at the screen.
Yeah,
A lot of those.
A whole bunch of them.
So also, like at this stage, you should be thinking about relocation process, relocation fees or services. So if you're living in apartment or somewhere else, should start thinking how you're gonna pack and move your stuff.
Yeah.
So step number 6 would be your residential broker.
Make sure the realtor is a CDPE certified property distressed expert or has experience in dealing with short sales and foreclosures, and that the person or company handling the short sale process for the seller has proven experience.
Yeah, that's in case if you are buying distressed property, so which we'll get to it later. But in general, you want your broker to be a part of brokerage association.
Yeah.
And but in general, what you'll get as well, you'll get a broker from your bank. So the bank would tell you what kind of agencies they're working with, and you'll be assigned somebody from this agency. Well, step 7, I guess you can start searching for what you want, even though that you thought that step number 1 would be searching and then doing everything else. No.
And just get your foot in the door to start looking.
Yep. So the search, you should ask yourself at this stage, so what will be the most important housing market trends this year and why? Actually, that's the question, should I buy or not? Even though probably you already determined that you need a house and you're looking for the house. Look at US median home prices, also price in your neighborhood or in the neighborhood where you want to buy. So where are mortgage interest rates headed? Is it up, stays the same, or they are going down? And consider always, just make a chart versus rent and buy. So for some people, renting is better than buying. So maybe you're this guy.
Yeah. And definitely look into it, because like some of these bigger cities like Los Angeles, renting's getting really expensive. So it might be smart to jump into a house if you can.
Yep, if you can.
Yeah.
So step number 8, appraisal.
Appraisal's third party. The more items you find on your inspection, the more negotiating room you have on your repair request to the seller. The VA appraiser will be conducting the inspection as well as the value determination. If it's a termite pest inspection, either the seller or agent involved will have to pay for you. So the VA appraisal, this is the little link right here, so check it out. and it's really good though. If an appraiser deems repairs necessary or the home to meet the NPRs that are outlined on the appraiser and frequently have to be fixed prior to closing, there are a few circumstances that would allow for an escrow holdback so the repairs could be done after closing, but those are dealt with on a case-by-case basis. My advice to you is to review the NPRs with your agent and see if this home is likely to pass the appraisal. Then talk with the bank holding the home regarding repairs. From there, you can make an educated decision regarding whether you want to move forward and pay for the appraisal fee. And from what I've seen, my understanding is that the VA appraiser does the appraisal when they see like a broken window, the gas line isn't hooked up with the fireplace, little things like that. It's usually minor stuff. It gets fixed and the appraiser goes back out to say that it's been completed and that they would submit it for the final appraisal. This appraiser is saying that they trust that it will get done and will wait to submit the final appraisal after they get the call that the window is fixed. So they will not have to go back out for the final appraisal. So so like the appraisal process as checking and verifying that the home is safe, structurally sound, and sanitary in accordance with the NPR guidelines, which is right here on the little link below. And check it out. But yeah, it's a really good thing, and it's here to help us.
Yeah, and also before inviting an appraisal, you can check the pamphlet 26-7, chapter 12, which outlines minimum property requirements. So you know what like NPRs or minimum property requirements are. So we'll give you also a list from a regional loan center, which from VA, at least for here, for LA, what are 14 major minimum property requirements for any real estate agent to consider.
And a good real estate agent knows what he's looking at, especially when it comes to VA loans. So if you got a real estate agent that doesn't really know if this house is going to pass, you might find another one. But the major ones you're looking for is the purchased property must be residential. Office buildings, storefronts can't be financed through VA home loans. If any part of the property is designed for non-residential purpose, like a hair salon in your garage, that portion must exceed 25% of the total, must not exceed 25% of the total floor area. Number 2, property must have space necessary to assure suitable living, sleeping, cooking, and sanitary facilities. Make sure the home has an adequate kitchen, bathroom, and sleeping area. You definitely don't want to pay for a house that doesn't have a toilet.
Yep.
Mechanical systems must be safe and have reasonable future utility. So the electrical, the plumbing systems must be in good repair and have some usable life remaining. Walk through the home and test all the light switches and review the seller's disclosure to determine if any electrical issue have been identified. Heating must be adequate. The home's heating system must be safe and adequate. Any unvented space heaters must be inspected by a heating contractor equipped with an oxygen sensor and meet all building codes or manufacturer's recommendations. Homes that use wood-burning stoves as a primary heating source must also have conventional heating system that maintains a temperature of at least 50 degrees. Property must have domestic hot water, continuing supply of safe drinking water, and safe method of sewage disposal. Water quality must meet local standards, usually set by the health department, and sewage systems must adequately dispose of waste. But if you live in Los Angeles, do not drink the water. That's horrible.
Yeah, roofing must be adequate as well, and also provide reasonable future utility. Also, crawl spaces must have adequate access, be clear of all debris, and be properly vented. Utility services must be independent for each living unit, unless there are separate shutoffs for each unit. So this isn't typically a problem for most properties. Properties must have safe access from the street, which is normally not an issue. Properties must be free of any hazards which adversely affect health and safety of the those who live there.
No defective conditions which impair the safety, sanitation, or structural soundness of the dwelling. The lot must be graded so that it prevents pooling of water on the site and drains water away from the home. No wood-destroying insects, fungus growth, or dry rot. And lead-based paint, of course, must be evaluated and corrected.
So those are main ones, even though they are maybe obvious for some of you, but it's better to check all those things before you invite an appraisal. And it might be tricky because in an area like LA where houses doesn't stay on the market for too long.
Not at all.
So who's gonna wait on you to do all those checks?
Yeah. So make sure you guys get a really good real estate agent that cares about what you're trying to achieve.
Or buy it from a friend.
You might get a discount there.
Yeah. Or at least you'll be able to check all those things, even though discount or not. So let's say everything is going smooth and you get to purchase and sale agreement. At least if here for California, you should look at California Residential Purchase Agreement and joint escrow instructions. That's a basic kind of document that you might want to read instead of your book.
Yeah.
To before you buy a house, which will outline all basic information. And you might find something that is not supposed to be there. So you can check with a default one, a basic one that you find on internet, and then the ones that you get in. Maybe there is something you don't want to pay for. And once it's done, you read the default purchase and sale agreement, you can submit an offer letter for seller, which is normally done by your broker.
Mm.
So you send a letter, you lowball or whatever you do, and you sit tight and you wait. You wait what he's gonna reply on his reply.
Usually they'll reply that somebody else bought it, or if you really want it, you're gonna have to go up another $5,000.
Here you go. So after you lowball,
Yeah.
I guess do it again.
But yeah, if you're around California and you see a house you really like, I'd probably not lowball them.
Yep.
Yeah. Depending where you're at.
Also, at that stage, you should be thinking about homeowner's insurance policy, which you normally would get from the bank who originates your loan. But you can look somewhere else and shop for the prices for better one.
Yeah.
And you'll also need an escrow agent who is...
Who's usually an attorney or an officer of a title insurance company, accepts money into the escrow account from the buyer and the buyer's lender, then distributes the fund according to the buy-sell contract. So it's like a middleman, making sure everything's getting done right. The title search is done, and they make sure everything's cool. Then you're free and clear, and the home should be going through.
Yep. So you'll see some of those middlemen that you...
Yeah.
In my case, in my understanding, you probably would be able to skip. But since it's a expensive purchase, that's why there are so many steps set up in place, so you won't get into trouble.
Yeah.
So even though you still can. So also at that stage, like in sunny states like California, you might look into credit for solar panels, because normally if you buy a new house, you can get them with a huge discount of a little percentage, which may cost you much more later in future. So you can look for those deals when you buy a house, even from your bank or from like local companies. Normally, like with the first house, you'll get like really good credit or discount, or also credit from for this year, for previous year of taxes, for this year of taxes. And also some banks, as a good big grocery stores, give bank cashbacks on whatever you purchase, even though you would probably prefer to buy for lesser amount. So I guess you can, but you'll get a small percentage of what you're paying. So, and also you might look into major companies who actually manages all the loans in states, because some of the banks, especially they're also like military banks, USA and Navy Federal, they won't hold onto your loan. Like once they originate the loan, they will sell it right away. It's not going to be on their books. So they would sell it to US bank and some like other companies. So many other banks who actually normally deals with those kind of assets. Even though that you would think that your loan would stay forever with USA or with Navy Federal. No. The reason is that they won't keep double of the loan amount on their books. Once it's on those companies' books, like Federal Reserve just creates money for that mortgage, since it's operated under Fannie Mae or Freddie Mac. So it's might be a little bit confusing. Like for veterans, definitely for military personnel, it's easier to go through those banks. But if your bank sells its loan to somebody else, then maybe somebody else would have better deals for you, if you know them. Let's say if you want to buy from foreclosure, it's the same difficult process as if you would build your own house. But let's stop on this one. So you would send a waiver letter from lender to VA, so saying that some repairs would be done after you buy a house. Because normally houses from foreclosure, they are not in perfect shape, and it's difficult for appraiser to appraise it to the point so they would pass VA inspection. And how VA looks at that letter, most likely negative. But if you hold your grounds, it might pass. And if a bank appraisal reports deficiencies in the properties, they will not approve the loan as well. So it's going to be another thing that you got to take care of. And bank-owned properties are usually repaired to pass the code of to pass the inspection for occupancy and close within 60 days, depending on your processing time for a mortgage. But most likely you got to motivate seller, or if it's a bank, there is no way to motivate them. You just got to be nice and figure out who's gonna repair your house so it will pass the code. So, which is difficult. So it's really difficult to buy foreclosure, something from foreclosure with VA loan. Almost impossible. So another risk of losing the property. So let's say even though you have an agreement with the bank and with VA that you buy a house, the bank found somebody else during that closing time. So they might kick you off of that short sale. And we'll give you a list of, at least for California, but it's true for states as well, of different websites on agencies who actually sell foreclosure properties. But main advice is that it's better to look on websites like bank websites, because they actually own those foreclosure properties. It's not that somebody is
putting it on Zillow or anything.
Another things that if you buy a apartment or condo, you got to be VA and VHA approved. Also, we are giving you a link where you can find all the properties that's been approved. And if your property is not there, it still can be approved if you're willing to spend time and you are kind of, I guess, an open-minded individual who can actually speak with somebody who is responsible for HOA at this apartment complex. And so they would, go forward and get that approval done, which is not easy.
Yeah.
So sometimes, and especially here for LA and LA area, it's sometimes much better actually to go through developers and builders. You'll buy a new house, brand new, up to the code, and it's most of it actually, at least those properties that I checked, they are less expensive than properties that people sell or that go through like regular channels or brokerage. So also we're giving you a whole list of builders and developers. And one of the last steps, not the least, in California there is an organization called CalVet, which can give loans for veterans.
Yeah, it's similar to a VA loan, but it's for veterans that are living in California. So they're funded through a sales tax exempt bonds. Even though the CalVet Home Loan Program has been totally self-supported and no taxpayer funds have been used to repay its bonds, there are state and federal limitations on the amount of bonds that it may be sold for the program. Federal laws and regulations resulting from the Mortgage Subsidy Bond Tax Act of 1980, the Deficit Reduction Act of 1984, and the Tax Reform Act of 1986, and the subsequent amendments have affected the ways in which CalVet bond funds may be used. The following paragraphs explain how funds currently available may be used to make CalVet loans. Qualified veteran mortgage bonds are backed by the full faith and credit of the state of California and must be authorized by a vote of people at a general statewide election. All qualified veteran mortgage bonds sold to support the CalVet loan program are repaid by CalVet loan holders through the payment of principal and interest on their loans. Under federal law, QVMBs may be used to fund loans only to veterans who served on active duty, who apply within 25 years from the release from active duty, and who received a discharge classified as honorable or under honorable conditions. Under state law, set forth in the California Military and Veterans Code, the veteran must have served during a qualified war period or received an Armed Forces Expeditionary Medal or Campaign Medal awarded by the federal government for the period served.
Yeah, so you might want to check if you're from California, CalVet rent houses. And in your state, I'm pretty sure there are like different programs, but keep in mind that those programs are like really small.
Yeah.
And there are a bunch of them. And of course, the CalVet, at least here, it doesn't make much more easier for you to buy a house because you got to go through them. And how smooth the process is going to go, it's going to depend on your and your ability to communicate with them. Actually, not on what is actually written in the law, but you got to be persistent to get through them.
Yeah.
Also, I would also recommend you to look into NACA. In my understanding, that's the best programs that actually exist in states through which you can buy a house, and you don't have to be a veteran. Anybody can buy it, which actually proves that you don't need to have that not special title. You don't have to serve.
You just gotta have the knowledge.
Yeah, got to have the knowledge and that they exist, and this one might even be better than CalVet and all organizations like that.
Yeah, you guys should really check this one out.
Yeah, so what what they stand for, what they say they are for economic justice through home ownership. So the main thing that they want you to live in the community and to be an active part of the community. So that's why this program exists. They say that they provide the best home purchase program, but everybody says that, so you got to check it for yourself. But those mortgage, the mortgage terms that they have are pretty amazing. What they say, there is no down payment, no closing costs, no fees, and fixed 30 years or 15 years is actually below the market, and it's true. Like I checked it last year, and it was below rates that VA loan from the local bank, or not local, from military bank would give me. And even though like I didn't buy anything and wasn't able to, still, like if somebody else from like an organization like that would propose loan better than something the bank or VA gives for veterans, then it's amazing.
Yeah.
And also there is another thing that they advertise. You can do a buy down. So let's say you got a 4% interest rate on your loan. You can buy down 1% of the mortgage permanently and reduce the interest rate by 0.25% for 30 years and 0.5% for 15 years to virtually zero payment. And you can, I believe you can buy down like up to 8 points. So let's say if you have 4% on your like 4% interest and you have 8 points, so you can buy down and get 2% interest rate. Or if you take for 15 years, so it would be even less. It would be around 1% or less. So which is amazing, and I don't know if VA or anybody else would give you that. But as with every organization, it's not. You got to commit yourself. So you got to go sign a bunch of papers and also volunteer to help people like yourself.
Yeah.
That's how it works for them and for us.
And if you're a veteran, you should be taking care of each other, so it shouldn't be hard.
Yeah. Well, that's pretty much it, guys. And as always, Joe, do you have any like informational resources you want to recommend or share?
Nah, I got to watch Guardians of the Galaxy Part 2, and I thought that was pretty cool.
I wish it could.
And like Costa was saying, I did finally get a home, and I'm over in the Santa Clarita area, so if you guys see me walking around, say hi. Come up. Let me know what's going on. And I'll also be with the DAV Chapter 13 over at the Sepulveda VA, so if you want to come over and check out their things and talk to me after the meetings, that works too.
Cool.
Yeah.
And if you want to laugh, watch War Machine with Brad Pitt, a new like amazing, hilarious comedy of how politics happens on a high level when you fight in a war in Afghanistan. It's a great movie.
That sounds pretty cool.
Guys, as always, at the end, quote or words of wisdom of the day.
If you kill enough of them, they stop fighting.
Yeah. Curtis LeMay. That's it, folks. Thanks for listening. Until next time, over and out.
Thank you.
Thank you.